Bitcoin just dropped $4,000 in a single afternoon this week. No hack, no rug pull, no exchange collapse. Oil, specifically the UAE walking out of OPEC, 58 years of membership, gone, 72 hours notice. And while crypto Twitter was arguing about memcoin burns and NFT drama, one of the most oil-rich nations on Earth just restructured the global energy order, and your bags felt it. But here's what nobody is telling you. This isn't just an oil story. This is a petrodollar story, a Bitcoin story, a story about what happens when the system that has controlled global finance since 1974 starts to crack in real time. And it's not just the UAE. The same week all this happened, the United States Senate moved to confirm Kevin Warsh as the next Federal Reserve Chair, a Trump pick, replacing Jerome Powell. Oil, the Fed, the dollar, Bitcoin, all moving at the same time. Stick with me, because by the end of this video, you're going to see exactly what just happened, why Bitcoin reacted the way it did, and where this is all heading. April 28th, 2026, the UAE announces it's leaving OPEC. May 1st, it becomes official. The UAE has a production capacity of about 4.8 million barrels per day. Under OPEC, they were capped closer to 3.2 million. That's roughly 1.6 million barrels per day of restricted output. They've been frustrated for years. But the timing of leaving now, during a U.S.-Israel conflict involving Iran, with the Strait of Hormuz partially disrupted, and oil already above $100, that's not just frustration, that's a strategy. And the moment the news dropped, oil spiked hard. Bitcoin dropped from around 79,000 to 75,000 within hours. One geopolitical move, instant global reaction. That's the market we're trading in. To understand why crypto reacts to oil, you need to understand the petrodollar. In 1974, the United States made a deal with Saudi Arabia. Saudi Arabia would price oil in US dollars. In return, the US would provide military protection and support. That created a system where every country needed dollars to buy oil. And if every country needs dollars, the dollar becomes the global reserve currency. That's the petrodollar. Oil priced in dollars creates global demand for dollars, which reinforces American financial dominance. But that system has been slowly weakening. The dollar's share of global foreign exchange reserves has dropped to around 57%, down from over 70% decades ago. Some countries are already experimenting with alternatives. Iran selling oil to China in yuan, India exploring non-dollar settlements, reports of Bitcoin being used in certain transactions during geopolitical stress, and now discussions around pricing oil outside the dollar system are no longer theoretical. That's where things start to shift. Because when the foundation of the global financial system starts to weaken, markets begin searching for alternatives, and Bitcoin sits outside that entire system. Now here's something most people missed. Behind the scenes, financial coordination matters just as much as public announcements. When countries face geopolitical stress, access to dollar liquidity becomes critical. And mechanisms like currency swap lines can play a huge role in stabilizing economies and maintaining alignment with the dollar system. These kinds of financial backstops often influence decisions long before headlines become public. So while the surface story is about oil and OPEC, the deeper layer is about control, liquidity, and monetary influence, and Bitcoin ends up reacting to all of it. So why did Bitcoin drop so fast? Here's the chain reaction. Oil uncertainty rises, oil prices jump. Higher oil keeps inflation elevated. Higher inflation reduces the chance of near-term rate cuts. Fewer rate cuts put pressure on risk assets. Traders sell. Bitcoin drops. That entire chain can play out in hours, and that's exactly what we saw. Now layer in the Federal Reserve. Any shift in leadership, policy direction, or coordination with government policy changes how markets price liquidity. And liquidity drives everything in crypto. When liquidity expands, Bitcoin moves up. When liquidity tightens, Bitcoin struggles. That's why macro matters more than ever. But here's the bigger picture. While this kind of news creates short-term volatility, it can actually strengthen Bitcoin's long-term case. Every time the dollar system shows weakness, Bitcoin's role as a neutral, borderless asset becomes more relevant. Bitcoin doesn't rely on central banks, it doesn't rely on political alliances, it doesn't rely on any single country. And in a world where financial systems are shifting, that matters. There's another angle here. The UAE has been positioning itself as a major global hub for digital assets. Dubai has become one of the most active centers for crypto innovation. Institutional capital is flowing into the region, regulatory frameworks are evolving, and the broader Middle East is becoming increasingly important in the global crypto ecosystem. That's not noise, that's a structural change. Now zoom out. What we're seeing may not just be volatility, it may be part of a larger transition. A world where energy markets are less centralized. A world where the dollar is less dominant. A world where financial power is more distributed. And in that kind of world, Bitcoin becomes more important, not less, because it offers something the traditional system doesn't. Neutrality, scarcity, independence. So what should you actually watch? First, oil prices. If oil drops, inflation pressure eases. Second, monetary policy signals. Any hint of future rate cuts matters. Third, capital flows. Watch where institutional money is going, because that usually leads price. In the short term, Bitcoin may stay range-bound while these macro forces play out. But in the long term, the bigger story is still unfolding. The system that has dominated global finance for decades is shifting, and Bitcoin was designed for exactly this kind of environment. This isn't just an oil story, it's not just a Fed story, it's a structural shift story. The old world ran on oil and dollars. The next world is still being built, and the people making moves right now are positioning for that future. The question is, are you paying attention to the same signals? If this helped you see the bigger picture, share it with someone who still thinks crypto and geopolitics are separate, because they're not. Drop your thoughts in the comments. Where do you think Bitcoin goes next? And I'll see you in the next one.